Hi, everyone. Welcome back to the Lighthouse Sessions. I'm excited. I have my new friend, Mark Halpern, with me. Mark, welcome to the show. Why don't you tell us a little bit about who you are and what you do?
Thank you so much, Jeff, for having me. I'm so happy to be here. What can I tell you? I'm a father. I've got 5 beautiful children, of which our last 2 are getting married at the end of this month, which is kind of nice, 12 days apart. So that's a lot to be excited about and a lot of bills. I have a business. I have a wonderful wife of over 30 years, and I have a wonderful business called wealthinsurance.com that I've been in for 35 years. And it's lovely. I get to help people who are either business owners or entrepreneurs or affluent families. And I help them, basically make sure that whatever they're building, when they're climbing that ladder of success, when they get to the top, they don't realize they leaned it against the wrong building and that it's protected. So there's no quicksand underneath that ladder along the way. So estate planning, we really help people around estate planning. We help them around tax mitigation strategies using insurance, which is largely not as well known. And then the other area that we're involved with is philanthropy. It's a very big passion of ours as well, helping people create legacies, and often just by converting tax into charity. So that's a bit about me.
I love that. And personally, I'd rather see money going to the charities than to the government. They'll be okay. They've got enough money to spend at the government level. Let's help the charity. Now, you mentioned that you started out, life was a little bit of a challenge for you at the age of 11. So let's go back there and talk about how 11-year-old Mark became who you are today because of some things that happened in your world.
Well, you're going to get my tear ducts going because obviously you just mentioned 11-year-old Mark, and I had this out-of-body experience, like seeing that little kid. So I never get that, but which is the way you describe it. So I tell people that I started my real start in business was when I was 11, and that's when my father, of blessed memory, died of a heart attack at the age of 50. I was the youngest of 4 boys. And my mother, who was 48 at the time, had to go back to work to support her family. She'd been a stay-at-home mom. And the reason that is because my father, he loved us, had a great relationship, but he was a busy engineer and there was no will, very little savings, and no life insurance. So it was very, very hard for us. We really had to develop a struggle muscle, which, by the way, I'm grateful for. Having kids, and I know you've got your teenage, your little kids as well. You want to spoil your kids, you want to give them, but at the same time, you don't want them to be entitled. In our case, we had no choice. We had to, not be spoiled, but we developed, great tools, and all my brothers and all, we all became very successful in our own way. And that information really fueled my passion to help other people. And the reason I bring that up is because you would think all those very successful people, even if your family would have everything in place. But most of the time, I'd suggest 85% of the time, they don't. They're so busy looking after everything and everyone else that when it comes to themselves, Jeff, no wills, no powers of attorney, no shareholder agreement, nobody knows where your documents are, your digital passwords. You can go to the Bank of Canada and see there's hundreds of millions of dollars of money sitting in accounts that nobody has claimed. You can actually go there yourself, Jeff, and put your name or social insurance number. You'll score a jackpot. But
Maybe
that's
I've got some unclaimed inheritance. Yay.
Yeah, actually, I found for one of my clients, I found like he had an old American account that had almost $14,000 in it that he'd completely forgotten. He'd moved many times, so you never know. But so that's kind of what fueled me along the way, and I take great pleasure in helping people get sort of like the peace of mind, knowing that things are all organized and in the right place, because we're living in a world now that everybody's got ADHD. Jeff, like if you were to send me a 3-paragraph email, like I'm saying that's chutzpah. What how can you do that? Or if you leave me a message on my recorded message that's 1minute and 12 seconds, it's like I pull my hair. How could you do that? So we're dealing with challenging times, and therefore we're really good at taking the the complex and making it simple, whereas a lot of people take the simple and make it complex.
Well, I think this is an industry where there is an addiction to complexity, when reality is people need simple. And as you said, we're all distracted. We've all got a million things to do. Nobody wants to sit down and read through a 20-page legal document or an insurance policy. I really feel we, as the experts in a field, need to learn how to speak English. And I one of my favorite things, I love talking to experts because they'll tell me their version of English. They'll be like, I caught about a third of that, and I'm paying attention.
I think, well, I think the challenge, and I bring this up, is, all of us have so much wisdom and knowledge that we want to share it. The challenge is sometimes it comes across as drinking from a fire hose, right? And it's like, it's overwhelming. So as you said, like, we're living in this TikTok generation. We need to keep it short, sound bites. And I think what people want is not necessarily the weeds. They just tell me what this is going to do for me. Like, what's the end result? The weeds, I can get into it, or I can get my professionals to help with the weeds. Or unless you're dealing with an engineer who might be very analytical, you can get into the weeds. But most people just want to know, what does it do? And that's okay. That's what I need. And then I need a Sherpa. I need somebody to help me. I need a team. I need a lawyer, an accountant, an investment person, an insurance person, a philanthropy, and they need to talk to each other. Like, don't be in
the magic there, right?
It's true. I remember being at a funeral, Jeff, many years ago. A dentist had passed away. And I remember meeting his lawyer and accountant and banker for the first time, right? Meanwhile, I also knew that I was showing up with a 7-figure check that was going to really help that family. That made me feel a lot more important than a lot of the people that were there.
I love that. Now, I'm going to ask you a question. I know the answer to this, but I want your take on it. I'm a father. I care deeply about my wife and my kids. I assume most people are like us. They care about their family, but there's some strange barrier to people. They don't want to think about their own death. So how do you overcome that? Because I think getting past that is the start or stop. It's not part of the process. It's whether the process happens or not.
Yeah, I agree with you, Jeff. It's kind of, I think that the majority of people are not part of the Dyers Club, right? They're not going to be part of that club, right? But I think because of the fact I had that experience myself, and perhaps somebody knows somebody who passed, with a neighbor, a good friend, a best friend, those people are just so much more sensitive to this idea that, there's going to be this inevitable day. I personally feel like COVID was very, very helpful for that. Like, it made people much more aware of their mortality. Yeah. And as a result, their incompletion. So we had people who were stepping up to do wills. Now that you can do it all digitally and sign things with DocuSign, and you can get insurance now without any medicals and no in-person. They just made it just much more streamlined, almost disrupted that area. But I think that as an individual, we have to say, look, there are two types of people. You love somebody or you don't love somebody. And if you love somebody, you take care of this. If you don't love somebody, you don't take care of it. It's kind of that simple. But Jeff, one thing I want to say to your listeners, it's very important, because if I asked you, I don't want to put you on the spot, Jeff, but yeah. I hope you have an up-to-date will.
Yes. Good. We didn't care about it until we had kids, and then all of a sudden it was like, okay, so some stranger can decide what happens to our kids. Not happening.
Exactly. And I think that's when people do look at getting a will. But the problem that a lot of couples have is they can't decide who's going to be the guardian. Not your sister, not my uncle. They're too old. They don't live here. But the government has a formula for how your assets get distributed if you don't have a will in Canada. It's called dying intestate. And they basically say, you have kids. What are your kids? 13 and 11, I believe?
13 and 16.
tenancy. So if you didn't have a will, it would basically say that the first $300,000 of your estate goes to your wife, and then the balance of your estate gets divided up between your wife and your two children equally, and your kids' portion is held by a public trustee invested in GICs until they hit 18, in which case then they get all the money. Is that something you'd like to see happen?
Hell no.
Great. So that should be, again, to get people off of their keister, that would be a really good lesson or story to tell. And I think, Jeff, that's another thing. Stories are so powerful.
Yeah.
Don't get into the weeds. Tell me stories. Tell me really real people, real things that happen, and then I can relate to it more and I can make decisions and move on it, I feel.
Yeah. And let's be honest, nobody writes it in their diary and says, okay, I'm going to die unexpectedly at the age of whatever. It's called unexpected for a reason. And, the reality is we either put it off and hope for the best, or we can actually plan and then forget it and move on. And, obviously update as things change. But I used to be in the accounting world, and I was amazed how many ex-wives were still sole beneficiary on an estate of somebody who's married and had a new family. It's like, wow, somebody should have thought of this.
100%. Look at it, even if people aren't doing anything about it, they have to appreciate that in their subconscious, they know there are things that need to get completed, and it rents space in your brain, and it does zap us of energy. And the nice part to know is it's not so complicated. If you just find somebody who's very capable and competent and can help you look at the big picture and plan holistically, they've done it hundreds, if not thousands of times. They'll make it very simple for you. And once you do get it done, there's this tremendous peace of mind that comes from knowing that everything's in its right place.
And I'm going to come back. I won't pick on professionals because I know they're all busy. They've got all their deadlines, but it always fascinated me. And sometimes it was the clients. I'd come in and say, I just want to make sure your will's up to date. And they'd go ask their lawyer, and their lawyer would say, yeah, everything's good. And it was like, no, tell me good as of date, at least, give me, good as of 20 years ago doesn't count. But it fascinates me that it's still little silos where you got the accountant here, the lawyer here, there's a wealth manager somewhere off, and if you're lucky, you've got insurance. I believe that the individual has to take it upon themselves to run that, but it also puts a little pressure on the professionals to at least know who each other is and be able to pick up the phone and say, hey, what's going on with this? Because it's those little silos where people fall between the cracks and get lost.
I agree, Jeff. And I think that might be a good litmus test to determine whether you're working with the right person. Make sure that, they're a specialist in something and they're doing their unique ability, but they have a bench of other specialists that they can either introduce you to, or they're capable of working with your existing, specialist professionals. And everyone's got to be speaking to each other, because otherwise we leave people in a lurch. And if somebody's selling a product, you got to know that they're going to have a certain prejudice towards the way they work. Or if somebody's afraid to work with other people, like it's not a territorial discussion. It's about inclusiveness and spreading it out and just doing the right thing for people.
I love that. Now we're going to shift gears, because really, truly, I get excited about philanthropy. And when I talk to somebody else who's a disruptor, I really want to go down that path. In addition to what you do in the insurance space, you also have, is it fair to call it an obsession with philanthropy? Is that a fair word?
Yeah, I call it a very, very dark, deep desire that every Canadian should be incorporating strategic philanthropy into their estate plans. That's for sure.
I love it. Now, what does strategic philanthropy mean in your language? Because I think that's a couple of key words to pull out.
Great question. So most people, Jeff, if I came up to you and said, Jeff, I'm riding my bicycle to Calgary to help conquer cancer. Would you sponsor me? You'd say, sure, Mark. I'd send you the link and you'd make a nice, generous credit card donation for $10.
Yeah.
Notice, Jeff, I put you down at the $10 mark. I'm just saying.
Yeah.
Maybe $100, whatever they can. And that's how we give philanthropy, right? So
yeah.
if you, there are better ways to give while you're alive than giving cash checks and credit cards. We've identified probably 24 ways to give more cost and tax efficiently, like donating appreciated securities, where you pay no capital gains taxes, or flow through shares, or anyway, that's while you're alive. And charitable donations while you're alive can be used to mitigate up to 75% of your net taxable income, which means they can be very, very efficient to save taxes and turn tax into charity, which I think everybody would be interested in. Where the strategic philanthropy comes out on the other side is with estate planning. And that is that most Canadians, I'd suggest 98% of the population, does not realize that charitable donations on death can mitigate up to 100% of estate tax. 100%, including going back the year prior. That means for every $2 you give to charity as part of your estate, you turn $1 of tax into $1 of legacy. So, one of the first questions, just even on your podcast, is if I had everybody in front of us who actually was listening, I said, hey, what's your estate tax bill going to be?
Nobody likes that number. They don't even bother talking about it. So,
and they don't even know it. They don't even know it, especially if they're a single, widowed, or divorced person who don't realize that in Canada, when you die, if you have a spouse, everything rolls over tax-free to your spouse. It's called a tax-free spousal rollover. But if you don't have a spouse, the government considers it as if you sold everything at market rate, and they want 54% of your RRSPs and RRIFs. They want 27% of the gains of any of your investment real estate or any stocks other than non-registered stuff.
Yeah.
You have a corporation, they want somewhere between 47 and up to 70% of the money you've stashed away there. In other words, it's a number that people don't work on. They don't have somebody to help them to ascertain what that is. Once they know that, and they're generous, well, now you can do all kinds of magic by turning that tax into legacy. And just, think how nice it would be to dream about, creating some, and you don't have to be Warren Buffett or Bill Gates. I just want to put that over, Jeff. It's for regular people. So that's called planning. And once you do the planning, well, the sun is shining. Then you can also do strategies like philanthropy as an example to help people.
Well, what I love in that is when you're planning, you have options. After the event, whether it's death or whatever, option is usually requirement, not, you don't have the choice. And for me personally, I'd rather see money going to a nonprofit that I support than going into government coffers and hoping it ends up being used for something useful. So how did you start disrupting in the philanthropy space? Because I'm in this world where on one hand, we have the philanthropists and they're all about, helping nonprofits, but most of them are doing it with the goodness of their heart and donated time. And they end up broke because they're putting all their money into their charity. There's a very disparate view of what a nonprofit means. It doesn't mean I starve to death with the nonprofit, but then there's the other side where, I'm going to do good, but it's going to have to wait because my business is running. I see somewhere there's a bridge between the two where good entrepreneurs make great philanthropists, and the profit-oriented mindset helps them add value to the nonprofits rather than always we're at zero and we got the plate out, we're passing the collection, trying to get money in.
So it's a great question. So you asked the origins of my passion for this is I'm Jewish, I'm Orthodox, right? And we have something called tithing. just like you would have in your church or your mosque. And in our world, it's 10%, right? Most of the time it is. And it's interesting, you can never give more than 20% of your money away because, like you said, you're not allowed to become impoverished at the expense of your family, right? So we call giving money, we call it tzedakah. Tzedakah is a Hebrew word that's often mistranslated as charity, but it actually means justice or righteousness. That there's an obligation. If you've done well and you've been blessed, and you're grateful, you have to help others. And there's two ways to give tzedakah. I can either write a check myself, which is very limited, or I can teach other people how to write checks, which makes it a much larger proposition, like, multi-level marketing. I can create way more money for charity that way. And I like to think I get a bigger merit because I had to sell, explain, bug, follow up to get people to sort of, drink the Kool-Aid eventually. And there's no question we have to pay taxes. Like that's what keeps the merry-go-round running. But I love this quote from Morgan Stanley. He said, you have to pay your taxes, but there's no law that says you have to leave a tip. And the government has come up with 25 different pieces of legislation since 1995 to encourage Canadians to give. They want you to give because they know that they can't. So if everyone knew that they all had 3 possible beneficiaries to their estate, all of us, you have 3 estate beneficiaries. You have your family, you've got the government, and you've got charity. And each of us can pick 2. Which 2 would you pick?
I can't think of many saying government.
Well, there are people, roads, bridges, socialism, whatever. But you're right. Most people would say family and charity. So with proper planning, you can be remembered for giving a lot of money away to charity as opposed to the government. And that's a good feeling because a lot of people in our country have spent a lot of time to become successful, but they haven't really spent a lot of time to become significant. And this whole conversation is a conversation that you're leaning into about what's your dream. But if you could give away $1 million to charity, who would you give it to? And if I gave it to you for free, why would you give it to that charity? Well, with planning, we can actually create that $1 million either by converting tax into charity or using pennies for premiums to buy insurance or changing the beneficiary of an RRSP or RRIF that would go 54% to the government. You can give it to charity. So it's really just, there's no cookie cutter, Jeff. Every situation is unique, but it requires a conversation about how do you want to be remembered? What's important to you?
It's funny. I'm flashing back to conversations I had where clients would bring their will in and they'd share their when I die, X dollars of the net goes to this charity. And at the time, I let them do their thing. But now I can see we as advisors, whatever we are, we can add value by saying, "Did you know you could do this?" Instead of netting out and cashing out, paying your taxes, and then giving what's left over to the charity, actually doing some things. One of my favorite things, by the way, was life insurance policies where the family was covered, everything was taken care of, and then it was common, especially in cancer patients, they'd will their insurance to cancer research.
Yeah, amazing. Look at or why not, if you have an insurance policy now, just change the beneficiary and include a dollar amount or a percentage to charity you love. Remember, every $2 to charity turns $1 of tax into $1 of charity. So we have more advanced cases, Jeff, where let's say somebody has a $5 million estate tax. I mean, they're obviously worth a lot of money.
Yeah. So
maybe they've met an insurance person and they acquired a $5 million life insurance policy, like corporately owned or through a cash flow neutral strategy, whatever. But if they're charitable, why not double up on that policy? Instead of having a $5 million policy, create a $10 million policy. Have it paid out personally, give that to charity, And now your $5 million of tax becomes $5 million of charity, and you're remembered for giving $10 million to charity, as opposed to being forgotten by giving $5 million to Ottawa. And again, that can all be part of an estate plan that's very easy to just move the shells around. And all you need to do is have that information.
I love it. Now you have a ambitious goal, let's call it. You want to drive $1 billion worth of philanthropy. Let's tell our listeners a little bit about that, please.
Sure. So it's part of our mission. We've got sort of three parts to our mission, and it ties into this $1 billion. But one part of our mission is we'd like to see a Canada where we could be inspiring and educating every professional advisor and charity to be encouraging or educating clients and donors about incorporating strategic philanthropy into their estate plan. That's number one. And again, it's hard about getting people's attention, as we said, Jeff, but so that's just the reality. Second one of our mission is we specialize in insurance, life insurance, and people know what life insurance is, but very few people really understand what it can do. And it can be a huge benefit to create philanthropy, often by increasing your dollars anywhere between 8 to 30 times more using insurance as opposed to writing that check. So that's kind of neat. But the third part, which is what you alluded to, it is our $1 billion charitable aspiration. And that is, we're trying to create a national community of 100 professional advisors and charities that if we're each creating $10 million a year of current gifts or legacy gifts times 100, that's $1 billion. And that's not like pie in the sky. It's kind of like crowdfunding. We already have about 24 non-obligatory professionals and charities that have already signed on. And the idea is for us to be able to share with them these ideas. And if they're not ready to be ready for primetime players, they can collaborate with the people and the professionals that we're working with. It's really about, they say that as the tides rise, so do all the boats.
Yeah.
So it's not about being territorial and holding all this information to yourself. Because I do get this a lot, Jeff. People say, Mark, why do you share all your secret sauce with people? Don't you know it's your intel, it's your IP? But it's what I hear that somebody last week just posted on LinkedIn a $1.1 million insurance gift. And I know that person was part of my mentoring and coaching program and learned the stroke for me. I go, wow, that's a great feeling, because had we not met, that gift wouldn't happen. So it gives me a lot of joy.
I love that. And honestly, yes, we all have finite capacity for good. And we only have so many years on this earth to do good. But if we can inspire others, the ripples become huge. Now, you mentioned your coaching program. Tell me a little bit about that, and then I'll wrap up so we let you get back to your day.
Yes, so I appreciate it, Jeff. So the coaching program, I've always had amazing mentors. Like, I guess when I started in business, that was a big thing. There was training and coaching from the manufacturing companies, like the big insurance companies, and then they passed along their responsibility to the managing general agencies. And I think that there's been a loss in our world of having mentors and coaches. And let's face it, you can't win gold in the Olympics unless you have a coach.
Yep.
You can't be a successful parent without a coach. You can make mistakes. And so I had the best mentors that really opened up their kimono to me and shared their most prized secret sauce without any desire for compensation other than wanting to help me. And I felt like a real strong sense to pass it forward. So when COVID happened, there's about 35,000 professional advisors in Canada. There were a lot of people who had deer in the headlights, like, how do we pivot? So Zoom was popular, was hopping, and we decided to have a master class with Mark Halpern on, hey, what did Mark do to sort of pivot COVID? So we had 150 advisors sign on, and they paid $150 was like, wow, that was kind of neat. So then they said, we'd like more. So there were about 60 advisors who paid $500 for more training. And then there were others that said, no, we want more. So we launched a program called powerofplatinum.com. It was originally me and a tactical coach by the name of Jim Ruda, one of the top coaches in North America. And it's evolved. We've had over 200 advisors through the program in the last 5 years. Jim moved on, so it's now, my baby. We just started our newest group on January the 14th. We have 42 advisors, of which 21 are alumni, and the others are newbies. And the beautiful part is it's a 1-year program where it's 2 hours a month of a live Zoom with me. They get quarterly small group coaching by my professional coach who helps me. We have a WhatsApp group, so it's like community sharing. I come out of meetings. I'm, keep people inspired between, and then there's an opportunity to collaborate as well. Now, the neat part here is when I started in business 35 years ago, I remember reading the book Think and Grow Rich by Napoleon Hill. And one of the things that I had on my list of, sort of manifesting was I give away $1 million a year to charity. That was a crazy idea. I was barely paying the bills. So this Power of Platinum program is all the fees that the advisors are paying. They're going to our donor advised fund. So it's not even going to me. It's an opportunity for me to create a ton of money for charity that I can distribute in the course of the year and do great things with. So it's a beautiful thing, and we've sort of white labeled Power of Platinum for some more for-profit groups, but we want advisors to learn, how do you have the conversation? Like, what do you do? What's the process? Who are call them accidental philanthropists that we could be finding to speak to? So it gives me a lot of pleasure.
I love that. And I love that you're demonstrating how you create value, because I think that's one of my favorite things about entrepreneurs. We find value in unusual, unexpected places. And when you apply it to your passions, in your case, philanthropy, the leverage becomes huge as opposed to how much can I do today? So.
Well, look, I love to share the ideas, and I agree with you. For anyone who's on LinkedIn, please connect with me on LinkedIn. I have probably about 20,000 contacts, but we're always posting ideas, strategies, success stories, profiling people who are doing great things. And I don't know, it feels good that people have said, Mark, I really got inspired by this article or this post, or I did something. I followed your advice. But as I always say, don't give up your day job. This is the type of stuff that if you give up your day job and focus on, you'll be very busy, but you'll see your revenue down considerably. It's really just an add-on. It's something that you should be leaning into these conversations with clients and prospects and professionals, and you'll see tremendous magic that happens, because they'll see that you are not a salesperson. You're somebody who wants to do good. And oh, by the way, you do get paid as well when you do transact business.
Well, one of my favorite people in that space is Bob Berg, the Go Giver. I don't know if you've read his book, but he talks about how we can't outgive the universe. And to me, I think that is just a brilliant, when we do things for ourselves, the universe seems to keep score and go, okay, I'll give you the little bits you asked for. But when we're doing big things for other people, the universe says, I'm going to take care of you. So I want to say thank you for being on the show. It was a real pleasure, and you will be back, I promise.
Good, Jeff. I think that we have a whole show to do around our friends that we talked about. I really feel like I would love to hear from you and share with you also my mentor, Paul Goldstein, the late Paul Goldstein, talk about his journey and his wisdom that he taught me. And I think it would be great for your listeners.
Absolutely. Well, thank you for being on the show with me today, Mark.
Thank you so much for having me, Jeff. I really appreciate it.